This is Ken Lake with MAC's Technical Market Overview for Monday, July 24th. Big downturn today, followed by downturns for the last several sessions in a row in all the commodities. But it's days like this, times like this, that I try to convince producers that it's times not to make sales in here. There's better times to make sales, and I'll point that out here in a bit. Simply going to run through corn, soybeans, and wheat as it relates to the new crop contracts. The old crop contracts are somewhat similar in construction, so we won't have to worry about the actual details of the trade, simply because from a producer standpoint we would avoid sales on these downturns. So in D's corn, I want to widen this out just a little bit here so that we can take a look at today's trade here on the black crosshairs. So we actually have a green day in D's corn. We closed above the opening, gap lower, of course. So there's a lot of technical problems with D's corn in here. Not the least of which, though, is the stochastic that's fairly weak here, which is again is the signal that I take to let my producers know that they should avoid sales in here. Terrible time of the year for me to say that, perhaps, as weather could dictate whether we'd be correct or not about making those sales. But for now, we think fundamentals support avoiding sales in here. Another thing to do would be to expand this to a 60-minute view, and you'll see how this thing developed by 7 p.m. The gap here is between Friday's trade and Sunday night trade, and of course this is the 1 hour bar for the 7 p.m. trade, and you can see how it took most of its losses right off the bat on the opening last night and then leveled off and closed higher in D's corn. A little bit of an overbought stochastic in the 1 hour chart, but unless you're a day trader, you're not going to worry about that, and therefore we won't worry about that signal at this point. Switching to the November soybean chart, kind of a similar situation, except that we still have relatively decent value. But notice, if you could take a look at the bar that we used for today, even though we closed lower on the day, lower than the opening, we closed at the higher end of the range. So all in all, at 10.10 November futures, still not a bad place to be here. We don't think there's a lot of damage done here. Stochastic a little bit overbought, and you can see that sell-off. Again, this is a daily chart. We switched to the 1 hour chart to give us the similar view that we looked at in D's corn. We'll again see the 7-8 p.m. trade from the overnight and the bottoming out, and then a little bit of a rally here at the end. September wheat's going to look the same way. September wheat, actually September wheat's maybe a little weaker, and geez, unfortunately the wheat trade for the last several days hasn't been that good. I need to switch to the daily chart to point this out. Notice that we broke support at 493. This is a support level I talked about last week. We broke that. Signals for a lower trade in here. Support will be this 478 level and a 472 level. But again, getting very, very weak here from a momentum indicator standpoint. Should be a market that should gain some buying interest here before long. I want to switch to the intraday stuff. We see, again, the 7-8 p.m. Trade from the opening last night, the lower gap, and then all of a sudden here at about or later on this morning we saw another gap lower, but a little bit of a close higher into the end of the session. So we'll have to see how the Monday night's USDA crop conditions report treats us, and then trade into Tuesday morning. One would think that we're going to see a correction higher in all these grains.